Right now, as we speak, the United States national debt has officially blown past a number that is, well, it's pretty hard to wrap your head around. And it's sending some serious shockwaves through the entire global financial system. So let's get into what this actually means for all of us. Just look at that, $39 trillion. To put that in perspective, that's more than the economies of China, Japan, Germany, and the UK combined. And if you think that's bad, the projections show it could hit a mind-blowing $64 trillion in just a few years. You know, this isn't just some American problem. The whole world is basically holding its breath, wondering if the very foundation of the global economy is about to crack. And if it does, it could bring everything we know crashing down. So how on earth does a country rack up a $39 trillion tab? Let's take a quick look under the hood. Think of it like a credit card for an entire country. When the US government spends more money than it brings in through taxes, it has to cover that difference. And it does that by selling bonds, which are really just IOUs that promise to pay you back with interest. Okay, so who owns all these IOUs? This might actually surprise you. We hear a ton about countries like China and Japan holding US debt, right? Well, they only hold about a quarter of it. The vast majority, 3/4, is actually owned by Americans. We're talking about US investors, banks, and even the Federal Reserve itself. And this timeline, this shows just how fast the problem has been spiraling out of control. 40 years ago, the debt was just $2 trillion. Then came 2011, when S&P downgraded America's credit for the first time in history, which sent markets into a complete tailspin. And now, we're at $39 trillion, on a fast track to $64 trillion in just 5 years. The speed of this is frankly terrifying. Now, this isn't happening in a vacuum. You can be sure the rest of the world is watching, and some of the biggest players are already quietly, or not so quietly, heading for the exits. Just look at this trend. China is strategically selling off its US debt. It's part of a bigger plan to insulate its economy. India's holdings are at a 5-year low. Brazil's pulling back. We're even seeing America's European allies and major pension funds getting rid of billions. The message here is pretty loud and clear. Holding US debt is starting to feel way too risky. You know, French President Emmanuel Macron really hit the nail on the head. He basically said, Europe is stuck between a rock and a hard place, getting flooded with Chinese goods on one side and dealing with unstable US debt on the other. And that's exactly why he's pushing for a European alternative to the dollar, trying to shield the continent from America's financial storm. So, what's the plan to fix this? How do you defuse this bomb? Well, the two main ideas being thrown around feel less like solid strategies and more like desperate gambles. On one side, you've got Donald Trump's big bet on tariffs to bring in more cash. And on the other, you have Elon Musk betting that a massive productivity boom, all driven by AI, can help the economy grow its way out of this hole. Both are huge long shots, and both have some pretty serious flaws. I mean, Elon Musk has been incredibly blunt about this. He's on the record saying America is headed for bankruptcy. His big idea? A massive AI and robotics revolution that he thinks could supercharge the economy enough to actually pay off the debt. So, what about the tariffs plan? Okay, let's do the math. The US runs a $2 trillion deficit every year. Tariffs, at best, might bring in an extra $100 billion. That's a drop in the ocean. It's like trying to bail out the Titanic with a teacup. It just doesn't solve the core problem. And to make it even worse, the whole plan might get ruled illegal by the Supreme Court, which would mean the government has to pay it all back. And Musk's AI solution? Well, it's a fascinating idea, but it's a real long shot. Most economists say that for AI to have a real meaningful impact on the national debt, it would probably take decades. And the big question is, does the US have that much time? So this brings us to the really scary part. What actually happens if the US government can't pay its bills anymore? What does the detonation of this $39 trillion time bomb actually look like? It would be a domino effect of, well, epic proportions. The first domino to fall is trust. US bonds, the one thing that was considered the safest investment on planet Earth, suddenly become worthless. That immediately sparks a global panic, and from there, the markets just collapse. The first, most immediate, and absolutely devastating blow is the collapse of the US dollar. The bedrock of the entire global financial system just crumbles. Its value would plummet almost overnight. And with the dollar in free fall, global trade would grind to a halt. Think about it. If no one trusts the dollar, how do companies pay for imports and exports? The supply chains that keep our world running would just snap. And then the credit markets would freeze solid. What does that mean for you and me? It means getting a mortgage, a car loan, a small business loan. It would all become basically impossible. An immediate, deep, and incredibly painful global recession would follow. And all of this leaves us with the most unsettling question of all. For decades, the entire financial world was built on one simple idea: U.S. stability. But if that foundation cracks and the world's so-called safest asset is no longer safe, then what is?